Hello and welcome to Indian Open right here on BloombergQuint Live. It doesn't promise to be a good day of trade, multiple factors out there. Let's get you up to speed with all that's happened. So all that's happened and all that could happen over the course of the next 1 hour. First, the US markets had a bit of a lackluster day. They did well and then came off as well. I think the Gilead Sciences trial failure put paid to hopes of any kind of an uptrend continuing. So downtick today for some of these some indices in the session today. Very much possible Asia is starting off on a lackluster note. The SGX Nifty is pointing towards a start which is almost 100 points lower in the session, so it doesn't seem to be a good start to the trading day today. Could it worsen is the question, and I think we have events at our backyard which could actually lead to do that. So first, quick updates on what's happened, and then we'll of course get in our guests, get in my colleagues to speak about what are the key stocks in news as well. So let's try and do all of that. First, quick updates on the buyback norms. The buyback norms relaxation could aid IT stocks in the session today. Remember, the IT stocks were up about 5 or 6%, the likes of Infosys, HCL Tech, TCS. And these relaxations could well aid sentiment for some of these names. Anyway, there's a bit of a risk aversion that we will see. So IT might well be at top of the pile in the session because I don't see HUL being risk averse after Unilever's comments yesterday. I think the bigger problem for our markets today, amidst all this COVID-19 crisis, is what Franklin Templeton has done. They wound down 6 credit risk schemes effective today. We'll talk to experts in a bit. But this has the wherewithal to just completely if not freeze the credit markets at large, bring a lot of uncertainty in them. It will create a panic amongst investors into a lot of these credit risk schemes across mutual fund houses. There might be redemptions. As silly as that may be, or as it's not silly really, because investor behavior you can't quite predict and people might be scared, but as unnecessary that it would be, it might well still happen. And mind you, that's a problem for NBFCs as well. Also, what is a problem for NBFCs is the response to RBI's TLTRO2 yesterday, wherein it was done with an intention of some liquidity coming in for the mid-sized NBFCs. And I think the response to that clearly shows that the institutions are not willing to create the risk appetite for themselves. And I think Sanjeev Bajaj's tweet also puts it out, right, that the response was lukewarm. I think multiple conversations going about what banks or the government probably needs to do in order to try and restore some bit of risk appetite, if it is even possible. And if not, can the government take on some of the heavy lifting itself as opposed to trusting financial institutions to do? But I dare say, I think banks, NBFCs in particular, could well be in a spot of bother today. Well, we've got the apt guest talk about all of this. Samir Narayan Johnson right now with his thoughts. Samir, it's so good having you. Thanks so much for joining. It's been a while, but I was really hoping to talk to you today. What's your sense, Samir, of what all of these things do to an already troubled market? Yes, the headline numbers might not be showing that, but we had these, reverberations running within, and now this Franklin event could well be a big problem.
Well, morning, Neeraj. And in fact, it's nice talking to you after a while. Indeed, I think it's a new normal now. And the way I think things are looking, yesterday was a very action-packed day for the bond markets in general. I mean, the Franklin news is definitely unprecedented, but I think the other two events as well. That's the TLTRO 2.0, the second version that the governor had mentioned last week. I think that the response that it got from the participants, that clearly shows that I think the market as such is facing huge liquidity issues, even for so-called investment grade paper that is being put out. So if that's the case, then the high risk credit papers, which effectively the funds of Franklin were owning, I'm sure would have seen a lot of risk, heightened risk perception by the investors, and hence you saw massive withdrawals and redemptions. And I think that's the reason why probably the regulator is also taking steps of trying to ease the default valuation for MFs. Now, I think these are the two things that also happened yesterday, but perhaps deserve equal mention. Because on the other hand, the reason that TLTRO 2.0 is not getting a kind of warm response that the first version got is also reflective of the fact that because there are limits of deployment and where you can put that money in, I think it shows that the entire perception of intermediaries to be able to find those NBFCs to lend to in the second version is perhaps not as much as, or they may not be wanting to also. So I think those are two factors that one should see, that the lack of liquidity is a huge concern. And trust me, I think if you starve the market of liquidity at any point in time, that's not a good signal.
Yeah, Samir, the other point is, what do you think happens to NBFCs? I mean, when I look at when you look at the Franklin Templeton schemes and the papers that they have, it clearly is evident where the illiquidity lies, right? For them to not be able to face the redemption pressures and therefore wind down the schemes. Do you reckon companies like Shriram Transport, Piramal Enterprises, which have already been beaten down, yes, could actually come into another round of a gash?
Well, Neeraj, I think the way the fundraising for most of these NBFCs has happened, because a substantial part of them have resorted to bonds as well as bank borrowings. Now, the moratorium given on the asset side for 3 months, and the fact that now you don't have any clarity on what is going to happen towards servicing the liability side, I think that is something that people are really bothering, and they are very concerned about, because tomorrow, if you have a situation whereby the entire asset liability mismatch on the timing and duration side, how does one tackle that? Because if assets have to be serviced for are not getting serviced for 3 months, but at the same time the bondholders have to be paid interest. So I think that's a huge catch-22 in terms of liquidity, and that is what is clearly the bond markets are showing, that even today the so-called, otherwise these papers would have been perfectly, credit risk would have been manageable, rollovers would have happened, there would have been takers. But today, unfortunately, nobody wants to be, saddled with so-called the baby when the music stops.
Yeah, that's indeed true. Now, I just want to bring up something that other developments that are happening. So, for example, the greed and fear, Jeffrey's greed and fear portfolio changes have been announced. I think companies like financials like HDFC Bank, HDFC Life, and ICICI Bank, they are saying will be removed from the portfolio. Kotak Bank would be introduced with the 3% weightage. Cipla will be reintroduced, and Reliance will add some weightage. But the key is some of these financial names are constantly getting under pressure. Now, we spoke about NBFCs, Saminada, and what about the blue chips, the HDFC Bank, HDFC Lives of the world? People taking some chips off the table consistently because this lockdown shows no signs of easing off. The economy shows no signs of will not show any signs of an immediate relief, and therefore consumer behavior linked financials, could they come under further pressure? I'm looking at an HDFC Bank, looking at HDFC Life, looking at Bajaj Finance, all of them.
Well, Neeraj, let us look at the problem through two different angles. First is that when will this COVID-19 issue be sort of put behind us and we get back to life as normal? Now, that's a medical issue, and that is going to take time. I mean, we've seen news flow on the Gilead one that you mentioned. Now there are some vaccine trials that have started in UK, so results are awaited. Even India is doing a bit on that. Now, so that is going to take time. So unfortunately, the time frame for the cure by which you can get the population back to life as usual, that was going to take some time out. Now, in the meantime, we need to see what is happening locally on the restoration of normalcy post the lockdown getting eased. Now, there also there are versions, because even yesterday the number of cases in Maharashtra actually hit the highest on a single day so far. We are doing a lot of testing, so that is also could be a factor. But nevertheless, one can say that we have done a good job. But the numbers in India are definitely not something that we can say that we can get back to life as usual tomorrow. So that element is also uncertain. And the third and the most important part is that what happens is that there's going to be a lot of income hits, job losses. So in that situation, how does the entire consumer credit demand hold up? Unfortunately, there's going to be a lot of cutback on both discretionary as well as any sort of normal expenditure that one would have otherwise taken as a baseline case in a normal circumstance. But that will have to be rewritten. So the loan growth and the loan book that people were right now used to in most of the cases of these NBFCs as well as the blue chips of private banks, I think that is not going to be there. So today, if you have a single-digit credit growth, I think that's probably going to worsen further before it starts picking up. So in that situation, the valuations that 2.5, 3 times book, and the fact that there's a huge ownership of all of these names, I think that is what is actually creating the scare, because nobody wants to wait and see how things happen. Everybody wants to be out of the door first, and hence you see a sort of called race to the exit.
Okay. Well, so that's the broad brush view. Now let's talk about some stocks in news as well. It's important to discuss all of those. First, results that came out, and Somit Sarkar Johnson to speak about Bharti Infratel. And Somit, it was astounding to see the reason for the increase in other expenses for Bharti Infratel. But give us the whole picture.
Well, if you see Bharti Infratel's EBITDA, that dropped nearly 10% compared to last quarter. This is the biggest quarter-on-quarter drop that the company has reported since listing, and this was primarily due to other expenses, which jumped nearly 2.5 times sequentially. Now, according to the company officials, the jump in other expenses was due to provision for bad debts, which is in line with the company policy. However, it did not mention the amount, as the delay in payments were from telecom operators who are currently operational in the industry. The delay and misses in payments from operators were on account of the Asia matter or COVID-19 related disruptions. That is what the official said. However, the company currently does not see this as a concern, and it is expecting the payments to come through, and it will wait for a couple of more months to consider it as a default. In the previous quarter, also the company had provided for bad debts, but those were mainly related to telecom operators who have already exited the telecom industries, and currently the bad debts are because of the telecom players who are currently present in the industry. Some of these negatives from provision of bad debts were offset by higher exit charges, other income, higher energy income, and lower finance costs in the fourth quarter of financial year 2020. Now, the management in the earnings release also said that the telecom industry is among the businesses that are least impacted due to COVID-19, and it sees no significant impact on the financial position and performance. However, it remained concerned on the negative outcome of Asia case, as its top two customers, that is Bharti Airtel and Vodafone Idea, are the worst hit. Separately, in the board meet, the management has yet again extended the long stop date for Indus Infratel merger completion till June 24 from April 24.
Okay, Somit, thanks for putting that into perspective. Samir, does it sound a bit strange that a company of Bharti Infratel not getting dues worth 200-250 crores from a sector that is arguably not seeing too much of an impact of COVID-19, which is telecom?
Well, Neeraj, I think this is the new normal, that you don't know where is the cash flow strain and what is it being caused by. I mean, just because it may be absolutely business as usual, but unfortunately, if there is just no recoveries, if there is just no payment collections, then there is a cash flow issue, and hence, it is going to lead to a cascade in terms of them not being able to pay, their suppliers, their vendors. I think those are realities. So that's the reason why what the market is now trying to do is, I think FY20 pretty much we've reconciled that it will be a flat growth. Even FY21 may be a lost year. But unfortunately, in this time period from now in the next 12 months, how many casualties we'll see because of this cash flow crunch, that is the unknown right now. I mean, Bharti Infratel, quite honestly, the reasoning is absolutely a bolt from the blue, because the reality would be that in such circumstance, the telecom would be the new sort of consumption angle, because everybody working from home, demand for data, all those factors are reality. But unfortunately, if people are not being able to pay, or the collections are not being able to be, you're not being able to collect bills, then there is a cash crunch. Now, how does one tide that? So the only way is that you need to be, if you starve a good business for liquidity at the wrong time, it becomes a bad business. I think that is something that we need to go and fix as a regulator, as an industry, and as participants, all three.
Yeah. Well, mixed views on Bharti Infratel from the brokerage community today, though. Credit Suisse bullish, I think CLSA is bullish, but a couple of others have sounded off the alarm bell as well. Let's wait and watch what happens to this stock in this session. What about some of the other key stocks in news? A quick perspective by my colleague Nikki Mitch and Danishi Johnson. Nikki, good morning.
Good morning, Neeraj. I'm going to start off with earnings first, where has been stable in data form. That's one counter which is expected to be in focus. Good set of numbers coming in from the company top line. You see the 20% growth out there. EBITDA has improved as much as 44% for this counter. Net profitability up by 7.3 times, also aided by the other income growth. Also, we're looking at Mahindra CIE automotive numbers. Now, the numbers are not good at all. If you look at the top line, We're seeing a 23% downtick. EBITDA, that's declined by as much as 36% on account of that negative operating leverage. And net profit, that has taken hit by 86%, mainly on account of forex loss, which is to the tune of around 45 odd crore. We're also looking at Ashok Leyland, which has increased the stake by 3.5% to 68.8% in its arm Hinduja Leland Finance, and also a bunch of life insurance, private life names in focus. We're looking at HDFC, which has reported in a 28% decline in the individual premium. ICICI Prudential, which has reported a 49% decline in the premium, and for SBI and LIC, the premiums have fallen by as much as 42% and 65% respectively. So even COVID-19 has impacted the growth of life insurance put together in the month of March.
Okay, that's a crisp set. Nikki, thanks so much for putting those into perspective. Samir, can I come back to you on insurance now? I mentioned about greed and fear reducing their weightage on HDFC Life. HDFC Life itself had told us about, in a very candid fashion a few days back, that business had come to a grinding halt, and ICICI Pru's performance, frankly, is actually even worse. If you have an insurance company in your portfolio, Samir, would
well, Neeraj, I think
we'll get a time to buy them later.
I think what one needs to look at is that, the lockdown which started post 25th of March, I think that basically took out pretty much the last 10 days of a very heavy seasonal last quarter. Now, this is where one would say that typically the business that was lost in the month of March itself, is what we are right now seeing in terms of the numbers. I mean, ICICI Life down 49% YOY, SBI 42%. I think so. It's an industry-wide situation, which may be because of the timing of the lockdown. Now, what remains to be seen is that does the pent-up demand spill over to first quarter of the next fiscal? Because you have been given extensions for most of the things from March end to June. So I would assume most of the companies as well would ensure that continuity of policies will remain as long as the premiums get paid in the next quarter. So I think we need to see at least 3 quarters before we can make a conclusive remark that the entire insurance penetration story is not being played out as expected. Because I think this could be a pure timing issue, because the lockdown happened at a time whereby the collections would have been massive and the heaviest seasonally, and hence you are seeing that contraction. So I think let's just wait for at least, if not 2 quarters, at least 2 more months of data to see how things are.
Okay, no, I take on board that point, Samir. So my question only is that you are not completely writing off the space as of now. You're waiting for data to come in.
Absolutely, because I think what happens is that after this entire COVID-19 issue, the entire sensitivity of people towards health care and insurance as a product is probably far better and far more receptive. So I would assume that the natural gaining of market share in terms of penetration rise would happen. It's just that because right now we are in a period of lockdown, the interest is not getting translated into actual premium payments. So let's just see what happens over the next 2 months. So this correction may actually be a good time for one to reevaluate and look at wherever stocks are corrected.
Okay. Now, viewers, let's get in technical experts. I just want to make one point here. I think people should smartly just look at the risks to different businesses as well, and the opportunities in different businesses. As Samir said, that maybe insurance will become a part and parcel of everybody's life in a bigger way, and therefore look at that long-term implication. And that is one thing. 2, I think a lot of bull calls have come in on some of the alcohol stocks or ITC. You've got to question whether, in a quest to raise money at a times like these, would it be an easy solution to go out and increase taxes on some of these products like alcohol or cigarettes? And therefore, should you be wary of these names? I'm not saying you should be. I'm saying you should question these things before you take any investment decisions. Let's get in Shrikant Chauhan with his thoughts. Shrikant, good having you. Thanks for joining in. What's your approach to trade today, Shrikant? We're likely to start off lower. Can you initiate a trade after we start off about 100 points lower?
Good morning, Neeraj. I think, the markets are very clearly in a range. They are not crossing the levels of 9,400. And on the downside, 8,900, 9,000 acting as a very good support for the market. So if we are opening, let's say, by 100 points, then there is no point in taking any specific position, because then again, we are opening somewhere close to 9200, 9250 levels. But yes, in case if we see furthermore decline because of some specific domestic development on the Franklin side, and in case if we see the market is moving towards 9150 levels, then there we should look for creating some long positions. We are of the view that 9100, 9150 should act as very good support for the market. We should keep patience, create long positions around 9150 levels with a stop loss at 9050. I think again we are going to see the levels of 93, 9350 in the near term.
Okay, well, that's interesting thought. What is it that you are doing in terms of specific trades in that regard then today, Shrikant?
Yeah, see, like yesterday there was a lot of activity or weakness in all FMCG stocks. So based on the overall formation of FMCG stocks, we are of the view that in the short term we are going to see some correction, and stocks which are available at their resistance level, there we should look for creating long positions. Jubilant Food, which was around 1490.95 yesterday, there we should look for creating short positions with a stop loss at 1535 on the higher side, and we can again expect somewhere around 1400, 1420 on the downside. The other stock on which we are bullish is TCS. Yesterday there was a lot of activity in all IT companies, and they have broken their important resistance level, below which they were struggling since last almost 1.5 months. So clearly they are into trending mode. If there is any lower opening close to 1850, 1816 for TCS, there we should look for creating long positions. We can keep stop loss at 1800 for the same, and we can again expect 2000, 2020 on the higher side.
Okay, in moments from now, we'll get in Sunil Zaveri. He's looked at the bond funds for a really long time, and I think it'll be important to get his view on what would happen to some of the other schemes, if at all, because I think this is something that is aching everybody. So we'll get in that question going in just moments from now. Shrikant, I just want a quick perspective on how do the charts look for a Piramal Enterprises or a Shriram Transport Finance?
Yeah, see, there we are seeing consistent lower top, lower bottom formation. Piramal Enterprises yesterday also, when the market was on the higher side, it came under some selling pressure and it closed at 854. So based on its formation, I'm of the view that it is heading for the levels of at least 805, 810. It was around 850 yesterday. And if there is any furthermore weakness, and based on the overall news flow for NBFCs, I think the stock may even correct to the levels of 700. So that's the lower point or the maximum point or maximum weakness that we are expecting in Piramal Enterprises. For Shriram Transport, again the formation is equally similar. There also we are seeing a lot of selling, but this time the stock is holding well above the mark of 580, 560. So today we need to see that whether Shriram Transport starts trading below 600 or not. One thing that we have to keep in mind is that Shriram Transport is heavily shorted stock. A lot of people have shorted this company, this particular stock based on option data, and that is why whenever there is activity or momentum in the market, we see a quick reaction or quick up move in the stock. So we need to be a little bit careful for Shriram Transport, but for Piramal Enterprises, certainly we should look for creating short positions.
Okay, so you would be comfortable creating a short in Piramal Enterprises today, right? Am I getting that correct, Shrikant?
Yeah. Correct.
Okay, so well, that's an important view simply because Piramal is also a stock that has fallen a bit already, but I think Shrikant is comfortable doing that trade on Piramal as Piramal even on open. Let's see, viewers, please be mindful that you need to take into account how much does it open lower by before you take any kind of positions on that name. Okay, I think we've gotten Sunil Zaveri, and I think it's important to get him simply because there's so many queries around mutual funds. Viewers, remember, some point of time in the day, we'll be also doing a show with two experts on what could these implications of this be and answer your questions. But for now, I have two pointed questions which I want to ask Sunil Zaveri about. Sunil, so good of you to join in. Thank you so much. What is the implication of this? First, a large market-wide implication, and then we'll come to Franklin itself.
The implication for the investor is that basically they will be stuck in their respective schemes for a longer period than expected. They will not have any window for redemptions going forward for some more time till the AMC is not able to either receive the proceeds on its maturity or they are able to sell it in the secondary market as and when the markets revive, because as all of us are aware that the markets have become illiquid post the COVID also. So this was a move which was required to be done. I would not say it was required to be done, but this is in the interest of the investors, frankly. There was a lot of redemption pressure happening. And the only thing which they would have done was sell the liquid papers to meet those redemptions or borrow from RBI to meet those redemptions. So this was required to be done only from that point of view.
Sunil, you would have looked at the schemes and the papers by now, if not beforehand also. A lot of people are asking if their money is lost, not fully, but maybe partially. Will they have to take a big haircut? Any thoughts on this?
See, haircut will be part and parcel of credit risk fund, and post the COVID issue, we do not know how many companies will go belly up. And all of us are aware that even the rating agencies are not allowed to do their downgrades or give you the right rating because of the moratorium on the borrowings of the investors and the retail segment at large. So you really cannot judge whether that particular company is solvent enough or no. Many of them have actually gone down as much as 80% in their turnover, etc. Some of them may have gone down by almost 100% in this particular lockdown. So what is the larger implication on which company and which segment will be very difficult to say. But yes, you should expect some kind of problems going forward in terms of the NPAs. So having said that, I'm sure there will be some haircuts as far as these FT schemes are concerned, but they will definitely try to maximize the potential of recovering the money as and when they can.
Okay. Sunil, the other question would be, what about okay, yes, there will be haircuts. That is part one. Part two, the other question, which is what I fear could happen and what should not happen. A lot of people would have money in credit risk funds in other fund houses. Is a simple solution, simple answer, right? People shouldn't go out and take money off believing that, oh, this could happen in all the other funds as well.
They will have to surely, definitely speak with respective relationship managers or fund managers, and I'm sure the mutual fund industry itself will make a proactive measure of indicating and talking to these investors or the advisors also, and telling them and showcasing them the portfolios which they would be holding. I have received some messages from some of the AMCs in terms of their portfolios, requesting all of us to actually act sanely, and which is the need of the hour. If we all start rushing out to exit out of all the credit risk funds, then there will be a contagion effect then. And that will be scary.
Sunil, I have one final question. We're very close to market open. You can choose not to answer this, but if you can, very confidently tell us, if you can, that is, are there houses where the credit risk funds are absolutely safe to the best of your knowledge? Are there funds or credit risk funds where people should be careful about? Quick 30 seconds, Sunil.
No, so there is credit risk funds are credit risk funds. There are fund houses who have done a very good job, and there are fund houses who would be struggling at the current juncture. So there is no straight answer to that, Neeraj, in terms of saying that this credit risk fund is better than the others, or this credit risk fund is absolutely safe. So please keep that in mind when you are investing or disinvesting currently. But yes, credit risk space will definitely have its own issues. But as I said, there are a few fund houses who have done a very, very good job in terms of managing the credit. I don't know whether you want me to name them, but I would say that they have done a good job.
Yeah, I mean, we've discussed this in the past. I think the likes of IDFC, etc., have had a very good record as well. So, but Sunil, thank you so much for taking the time out and giving us this quick perspective. Maybe speak to you once again later on in the day. But thanks for joining us for a quick perspective right now.
Okay, bye.
All right, this is important to be done just ahead of market open. Not that the equity market open is any bearing on that. The funds are locked in the credit risk funds of Franklin Templeton, but watch out for those. Okay, we'll talk more about this, as I said, a bit later on. For now, full tilt towards the equity markets. We are likely to start off soft. The SGX Nifty has already given us the hints of that. Asia is not looking particularly great. US futures very, very mild. So we'll not have a start which is gung-ho. The question is, can we build on from there, or will we buckle down tremendously? And would heavyweights fall too? I think time will tell. We'll get in Shubham Agarwal in a bit to give us his ideas too. Samir and Shrikant, of course, stay on too. But let's get started with trades, the pre-open session at least, and then we'll, of course, get to open. So, pre-open session pointing towards Well, the Nifty 50 1.67%, and that shouldn't surprise. It could be anywhere between 1 to 1.5%. Z Entertainment showing a 10% downtick. I don't know if the ghosts of the past come back to haunt this one. Never mind the traction in the last 2 days. The more believable number, and again, not necessarily a 10% downtick, but Bharti Infratel could show some weakness post the results, though brokerages have said that some of them have even raised the target price or continued the buy price on that. Look at banks, look at NBFCs. So ICICI Bank, HDFC Bank, IndusInd Bank, Kotak Bank are some of the ones that you should be monitoring in the session today. What could be doing well? Well, Bharti Infratel is actually in the green, so let's wait and watch what happens there. Tech Mahindra, HCL Tech, TCS, Infosys, the buyback norms eased, should aid them positively. So let's wait and watch if those stocks react positively or no. And let's give these rates a chance to stabilize before we talk more. Just a very quick broad brush into what's happening at the broader end of the spectrum, 2 or 3 names before we move back to our guests. And we'll get into Shubham Agarwal in a bit, but Britannia looks like starting off higher. MRPL looks like starting off higher. I wonder if there are NBFCs under pressure. Shriram Transport on 4.5% lower. Indiabulls Housing 4.5% lower. Maybe a Piramal Enterprise could be a bit lower as well. So do watch out for those names. We'll revisit them in just moments from now. So the pre-open, not too inspiring. Let's wait and watch what happens during the course of the first 8 minutes once these pre-open rates settle down. The rupee 70. No, I think there would have been some strengthening. Let's wait for the rates to come back before we talk more about them. Okay. Quick opening thoughts. Shrikant, Z has been the stock of the last 2 days. It's likely to start off maybe slightly lower today. What about trades here?
I think Z is specifically forming the formation based on the news flow. And I think yesterday there was a very clear-cut strong rejection when it opened higher and it went to the levels of 170, 173. So yesterday the stock has formed a strong reversal candle. And today we are of the view that if we see the stock is starts trading below 150, then we can expect further more weakness. So basically I'm of the view that the stock is going to take some more time. It is consolidating. I think the overall formation is still a bearish consolidation, but yes, below 150 we can see the levels of 135 again.
Okay. Well, IT too looks like starting off weak. Very interesting. Before we get in Shubham Agarwal, a quick word from Samir Narayan. Samir, these stocks were very active yesterday, and the SEBI norms change also helps in some fashion, I reckon. What's your thought?
Well, Neeraj, I think for tech as a sector, what is more important is what is happening on the US, immigration ban, because I think that is what is a bigger swinger to the business impact. Because if you see, most of these companies, even in their con calls, have mentioned that they have shifted now almost 90% plus workforce to the work from home. So that is that as of now, the lockdown locally has been taken care. But in case there's an immigration ban in the US, even if it is for, say, a quarter or so, I think that will impact, their entire on-site business and the visas, etc. So I think that is where perhaps the street is keen to hear more as to what happens. And I think, unfortunately, the news is going to come from the White House rather than any other place.
Okay, now viewers, I hope you can hear me now, but Shubham Agarwal is through as well. Shubham, thanks so much for taking the time out. Good having you today. How are you approaching the session? We might start off about 1% lower as is.
Hi, good morning, Neeraj. So if we look at the derivative data on both the indices, we can very clearly see that Nifty hardly has any longs or shorts. So net, if you look at the position seems very neutral, which is indicating that we might have the consolidation continuing for another few sessions where roughly 9,000 is a support and 9350, 9400 is a resistance. But on the bank Nifty, interesting data point is that the shorts that were created on 21st of April has still not got covered, which is indicating that there's a good possibility that the correction might start from the banking space, and the bank Nifty might act weaker comparatively between both the indices. So the overall view for another few sessions is just a consolidation. So I think it's a good time to build a long short kind of a portfolio which is market neutral.
Okay. So in light of that, what's the trading strategy? I mean, would you buy some puts today on the index and then couple that up with your specific stock recommendations as well, Shubham?
So puts, yes, on Bank Nifty, we can initiate that, but for the time being, I have one long and one short on the stocks front. So the first one is a buy on Tech Mahindra, and I think after the 100-point correction that we see on the Nifty, if this one opens a bit lower, I think that will be a good opportunity because the stock is quoting at a very important support. And if you look at the volume activity yesterday and the derivative data yesterday, there is indication of some longs getting built around this critical support of 500, and there's a good possibility of a bounce back happening here. So a very limited risk strategy, a bull call spread can be initiated because we are in the second half or the last half of the expiry. So a 520 strike call option can be bought and a 560 strike call option can be sold. The net spread is at 14 rupees. We're looking for a target of 25 with a stop loss at 8. And the short call will be on BPCL. And if you look at most of the oil marketing companies for the last 15 trading sessions, consistently it has been in a short covering rally, which is indicating that even though we had a good rally in most of these names, but that was just because of short covering. And now fresh shorts have started getting initiated, which is indicating that the overall trend, which is down, might resume again. So a bear put spread can be initiated on BPCL, where a 350 strike put option can be bought and a 330 strike put option can be sold. The net spread is at 5 rupees 50 paise. We're looking for a target of 10 rupees with a stop loss at 3.
Okay, can I ask you for a plain vanilla futures trade on Bharti Infratel? Is that something that you could look at? With the pre-open rates aren't settled as yet, Shubham, but it looks like it will start off about 2-3% higher.
So this has been one of the top pick, and this is one of the few stocks that we hold for our clients in the portfolio. And if you look at the relative outperformance, I think the stock has been really doing very well. And the short-term target on this one is roughly about 560, 565, at least for the traders who have taken positions there. So I think this is a well-placed stock. Despite the market consolidation, this could be in the buy list. And with a stop loss at 490, we can look for a target of 560.
Okay, viewers, keep in mind, I think Shubham mentioned Bharti Airtel. That is the target that he's talking about. But since we have Shrikant back, Shrikant, can I ask you about Infratel? It is likely to start off about 1.5% higher. Is there a trade here?
See, there is hardly any activity in Infratel because whenever there is negative news flow for the stock, it comes down sharply. And after that, it just moves up gradually to its resistance level. But most of the time, the stock is forming a lower top, lower bottom series. So this time also, if we see any higher opening, then we should look for exiting out of this position. I think it is better to focus more and more on Bharti, as Shubham said, and we also like Reliance Industries. So there we are of the view that they should do extraordinarily well in next few months.
Okay, so that's the view there. Okay, now watch out for some of the NBFCs. Like I said, the likes of Piramal, etc., are all starting off lower, so be mindful of that. Just a quick follow-up before I get back to Samir Narayan. Shrikant, 8 minutes have gone. Piramal and ICICI both are starting off 3.5% lower. Actually, Piramal is starting off 4.5% lower. Would you trade this one?
I think Piramal is still looking short, and there we are of the view that it is heading for the final levels of 700 or maybe 680 on the downside. So there is like quite a substantial gap, I'm going to say lower levels from current closings. So there we should look for creating short positions. But for ICICI Bank, I think the stock is very clearly into strong grip of bulls. I'm going to say in the short term, the stock is showing a lot of strength, and whenever there is activity or recovery in the market, we see a quick reversal or quick upsurge in the stock. So we are specifically bullish on ICICI Bank, and if we see any decline during the day, we should look for adding long position on ICICI Bank.
Okay, Samir, can I ask you for a view on Larsen & Toubro? Multiple brokerage houses notes have come out today. Everybody believes that we will see public capex because that's the only thing that can happen. Larsen & Toubro has gotten good order inflows as well. Do you reckon this could do well?
Well, Neeraj, L&T obviously would be a big beneficiary in case the government becomes the largest spender, which is where, that's perhaps the only way that one can get the economy back up and quick, because the spending has to essentially be through government capex. But the other factor that one has to bear in mind for L&T specifically is that the entire crude fall and the resultant, capex plans and the spending ability of Middle East as a region and its particular exposure and relevance for Larsen, I think those are factors that one should also bear in mind as investors, because I think those are important things, because if oil continues to keep falling, it has implications in terms of both the availability of order flow, as well as the fact that for India, domestic remittances will be lower. I think so. There are still a lot of chips that have to still fall in place. But yes, as a play on the entire domestic capex revival, I think Larsen would probably be leading the entire interest as far as investors are concerned, to be able to find stocks which will be benefiting best and first from the government capex.
Okay, we are minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Franklin Templeton to wind down 6 yield-oriented managed credit funds effective to this morning. Bharti Infratel revenue declines 1.3% and net profit down 18.7% sequentially, below expectations due to non-payment from existing customers, and EBITDA declines 10%, the sharpest sequential drop since listing. Tata Motors Jaguar Land Rover plans to reopen and gradually resume output from May 18 in certain plants including Nitra and Graz. Ashok Leyland increases its stake in Hinduja Leyland Finance by 3.4% to 68.8%. In key bulk deals, Julius Baer Multi-Stock Emerging Equity Fund acquired 0.93% equity in Equitas at 53.7 rupees per share. And HSBC downgrades Grasim to a hold from buy, cuts the target price to 550 from 780 rupees, says COVID-19 has further deteriorated the already weak fundamentals for VSF and caustic business. Yeah, well, that wouldn't surprise anybody. I wonder though, what would your advice be, Samir, to somebody who's holding Grasim in the portfolios? Is it a stock that one should liquidate and maybe move on to something else or cash?
Well, Neeraj, I think at this price, one would say that yes, there would be some amount of change or deferment in consumption patterns for viscose in general. But I think if you look at Grasim, the entire cement story due to its holding in Ultratech, I think that gives us a lot of confidence, because if there is going to be a revival in India, which is going to be basically capex spend led, then I think cement would tend to do well. And today, Grasim is available at a substantial discount, even as a whole co. So the other overhang, I think, which is probably spooking investors at this point in time, is the way the idea story is going to play out. Because, and for that, to be fair to the management, they very clearly mentioned that they don't want to commit any further capital to Vodafone. So I think, yes, there are concerns, but at this price, I don't think that selling out of Grasim may be a great idea, because at such times in the markets, one doesn't want to sell names which are very close to their intrinsic value stroke fair value zone. So I think that's where one would at least wait to see how things play out in Grasim.
Okay, so well, that's one view. All right, one quick follow-up, Samir. We have 30 seconds, so I'll request a quick one. Would you be wary of Bajaj Finance because of the consumer prowess slowing down, consumer spending likely to slow down?
Well, I think obviously yes, because the entire business predictability and the time frame becomes unclear. So why should the stock still continue to command 4.5 times book?
Okay, that's a good snapshot. All right, Samir, stay on. I just want your one final thought post market open. But since it's less than a minute to the markets to kickstart trade, so quick top calls from both our experts. Shrikant, I'll come to you first. Your one top call for the day today.
I think we should focus more on TCS. It was around 1870-80 yesterday. If it is opening somewhere around 1850, 1840, then there certainly we should look for adding long positions, because the stock has broken its multi-days resistance level at 1830. We can expect 1970, 2000 on the high side. So we are specifically bullish on IT companies, and in that TCS looks good.
Okay, so TCS it is from Shrikant Chauhan's hand. Shubham, what about you? Your top call?
Quickly, Neeraj, coincidentally, I have a short call on Grasim. So there's a breakdown, and we're looking for a target of 465 with a stop loss at 520.
Well, the fundamental news flow isn't too great either for Grasim, so maybe that matches. Let's wait and watch for Grasim in the session today as well. Gentlemen, just stay on. We'll just take in quick opening thoughts from you as well before we let you go, because it's just that kind of a day when we might need your opinions post open as well, very, very importantly. But let's see how we start off. About 1.25% lower. I dare say do watch out for the banks, do watch out for NBFCs. Those will be the important pockets. Here's how the markets are starting off. Well, about 1.7% lower, 31313 for the Sensex, nearly 9150 for the Nifty 50, the Nifty Bank 3% lower, so it's not the best of starts. What is correcting? Banks and NBFCs. IndusInd Bank 4.5, ICICI Bank 4.5, Bajaj Finance another 4% gone, HDFC another 3% gone, HDFC Bank is down about 2.3% back to 933. Maruti Suzuki about 1.9% lower as well. So it's not a great start. What is doing well is HCL Tech up about 1.7%, Britannia 1.6%, ITC about 1%, Larsen & Toubro about 0.5%, 844. Mind you, a bunch of very positive brokerage calls on Larsen & Toubro. I think one should watch out for this stock as well. The market's not cracking too much, despite what is arguably a big event from Franklin Templeton, but let's wait and watch. Let's be more patient with it. What about the broader end of the spectrum? What is doing well? Well, the future group stocks, lifestyle and retail are okay. There is some future consumer as well. There is some strength in MMTC, but very, very small stocks. What is not doing well? UCO Bank 8.5%, Shriram Transport 8%, Chola Finance 7%, Canfin Homes 6%, M&M Financial 5%. I think almost everything related to NBFCs has fallen already. Let's see if there are further corrections into those. JM Financial too, by the way, has corrected quite swiftly. Just the small cap end, and if there are some winners, I wonder if the Reliance Group stocks, the likes of TV18, etc., are all doing okay. So let's see what's happening there. No, not too much. There is some strength in Zlearn, about 7%, Jubilant Life about 5%, Den Networks about 5%. What's not doing well? Ujjivan Financial down about 6%, and GHCL down about 5% in trade. Tejas Networks poor results and down about 5% in trade. Quick opening thoughts: 2.7% for the Nifty Bank. Shubham Agarwal, I don't know if I got a thought from you on the Nifty Bank. Are you doing something here?
Neeraj, as we expected, that Nifty Bank is something which can underperform because of the short positions that are yet to be covered. So I think this space will keep declining. So I think one can look to go short on the Nifty Bank with a stop loss roughly around 20,000, and we would expect a target of 18,800 if we give it 2-3 days of time. And one stock specific idea that we can also add over here is SBI. Which did not participate when the Bank Nifty was going up, and now when the Bank Nifty is correcting, this is the first one to correct. So I think a put option can be bought here. So a 180 strike put option, which is trading at 5.5 rupees, that can be bought for a target of 9 rupees with a stop loss at 4.
Okay. Shrikant Chauhan, what about you? Quick opening thoughts.
I think the markets are range bound and it opened somewhere close to 9150, 9160 levels. Maybe during the day, the market may take some more time. I think by the opening of Europe, we may see some activity in the market. But yes, during this particular sell-off, we should look for adding TCS to our trading portfolio, because there we feel that the stock has clearly taken out almost all important resistance level. So it's a buy at this price, 1840, 1845. The risk reward ratio is quite favorable. We can keep stop loss at 1800, and we can see the levels of somewhere close to 1950, 1970.
It's looking like a bit of a doomsday scenario right now when you look at the news flow, but the markets are behaving okay for themselves. Shrikant, Shubham, thanks so much for joining in. Samir Narayan, one final thought from you, and that is on the high quality banks. What do you do with the HDFCs, Kotaks, and maybe some of the others? Would you be a buyer at lower levels, or would you bide your time right now?
Well, Neeraj, I think it's best that one would first wait and watch as to how the next, the March quarter, because the Bharti Infratel result is a very clear pointer that right now we don't know as to how things will play out. The liquidity crunch, whom will it hit and to what extent? So, I'm sure most of these banks don't have any unsecured lending books. But the problem is that even today, the retail end of the portfolio is likely to see stress because, people will miss out on payments, people will miss out on their EMIs, and, there will be job losses, there will be income hits. So I think the whole thing is still to unravel. yes, these banks will definitely play out. And if you ask me, will they be there 5 years down the line? Of course, and probably they'll be there with much bigger market shares. But between now and the next 5 years, how worse do things get and for whom, that nobody knows. So I think the best thing is, keep watching the tape and see what things are happening. But at the same time, ensure that, anywhere, wherever there is some signs of liquidity stress coming, you might get an opportunity because even good businesses will be available at very stressed valuations. So that makes a clear case for a buy. But I think these private banks, the ownership is also a factor that one needs to bear in mind, because it has been a trade that has worked well in the last 4-5 years. Everybody owns it. So in case we see a next wave of selling from the FIIs, I think that these will be bearing the brunt.
Samir, always a pleasure having you. Thank you so much for taking the time out and speaking to us today.
Thanks, Neeraj. Thank you so much.
Well, it's a good day because we've got some very good voices today on the show, and it was needed on a day like this. Rahul Singh joins in right now with his thoughts. Rahul, so good having you. Thank you so much for taking the time out. Rahul, you have to expect that I would ask you this. I'm not asking you to comment on what another fund house has done, but my question to you is: would the industry and the credit industry be able to digest this? Because I think there's fear, an unnecessary fear amongst participants that if this has happened to Franklin, it could happen to all of the others, which to my mind is unfounded. But it'll be nice to hear from you your thoughts.
Hi. Yes. Good morning. That might be unfounded because of the differences in styles of various mutual funds, the way they run their portion. So I'm not qualified enough to comment on that. But I think what we are seeing is that if the banks are not willing, even through the TLTRO route, to support the NBFCs, I mean, we saw yesterday that there was only 50% subscription roughly, then obviously the stress, the risk aversion and the stress following from the risk aversion is going to be felt in all parts of the market. We also saw that in end of March when there was a liquidity crunch and the liquidity even for AAA paper was very, very low. So I think it's what has happened yesterday is part of the same risk aversion which you are seeing playing out through the TLTRO route, through the spike in some of the papers, through the yield papers in the corporate bond side. I think it's just a culmination of that. I don't see it as a separate event per se.
Okay. What does this have any implications to your mind for the equity markets in terms of risk aversion, in terms of what would happen to certain select NBFCs as well, Rahul?
Yes, it does. But, equity valuations for some of these NBFCs were already, already factoring in a lot of stress on the liquidity side for the last 1.5, 2 years. And also some of the other corporates, whether you look at, some of the commodity names or the infrastructure names. If you look at the equity value which is there for those companies, it's minuscule compared to the amount of debt which is sitting on their balance sheet. So of the total enterprise value, the equity value had anyway shrunk. So on that small base, whether this will create another leg of huge correction, I would not tend to agree with that, because I think the equity valuations were already factoring in a lot of stress. And this just confirms that probably the equity markets are right on some of those names.
Okay. The other bit is the continuous pressure that we are now starting to see, Rahul, on everything related to consumer spending behavior, be it NBFCs or banks that finance that. Yesterday, Goldman Note on Titan, for example, spoke about how they foresee this spending for even a name like Titan to have issues. Would you reckon that these fears are not quite unfounded? Because in times of job losses, salary cuts, or just the unpredictability surrounding COVID-19, people might be prudent for 6 months to 12 months, make spending on essentials, and keep discretionary out of the buying purview for the time being.
Yes, that's possible. We need to see how it pans out. And also some of the discretionary spending which will take immediate hit is related to travel and tourism and, just the sheer activities or the consumption which is more outward going in terms of either eating out, restaurants, multiplexes, etc. So that's a very clear, I think, a very, very clear impact one can see. Now, whether this will impact consumption or demand for white goods or cars and two-wheelers, I think that we need to watch. That is probably stretching it a bit too much at this stage. We don't have enough evidence, or we don't have enough data to suggest that that is going to happen. Yes, to the extent that the slowdown persists and there are job losses and if there are salary cuts and so on, and if that trend kind of picks up over the next 3 to 6 months, then you're right. But right now, I would not worry on those kind of discretionary consumption, because mind you that that is nothing to do with behavior change. That is a underpenetrated market. For example, in air conditioners, that's a hugely underpenetrated market. Now, from a 3-year, 5-year perspective, whether this will reduce the demand for air conditioners is probably getting a little bit ahead of ourselves.
Okay. Well, the other bit is, viewers, keep in mind, it is now worsening. So the Nifty Bank is now down about 3% and led lower by almost everything. NBFCs included, not a part of Nifty Bank, but they are correcting. So Bajaj Finance is the top loser, but ICICI Bank, IndusInd Bank, Axis Bank, etc. HDFC Bank is down about 3% as well. So keep that at the back of your mind. And IT, which had a big move in trade yesterday, arguably on account of that relaxing of the buyback norms. But TCS too is seeing some bit of a downtick, down about 2.5%. Rahul, what do you do in a scenario like this? I mean, everything that is, at least to my mind, and maybe I'm mistaken, but things, whether large, mid, small, which are potentially showing some signs of strength or resilience in business are priced adequately to my mind. I mean, if you look at staples, you look at a mid-sized pocket like specialty chemicals, all of them seem to be priced well. So what do you do? Do you find value in businesses which will probably not recover immediately, but 6 months down the line? Or do you buy companies which will perform irrespective, even if the valuations are rich?
I think it's more of the former, because there are companies which are going to benefit from this situation, whether we look at sectors like general insurance, sector like telecom, chemicals, as you mentioned. So I think there are segments which will benefit. There are opportunities in pharma and healthcare also, which are emerging out of this situation, especially the way the US situation is panning out, and the fact that we had seen continuous pricing declines in generics, and now that seems to be reversing with shortages, etc. So there are a few bright spots for us in the market to pick from, and I think from a portfolio perspective, that is what you have to do. You have to de-risk yourself from segments where you think the impact could be worst in order of priority. So and therefore move the portfolio towards stuff which you think is going to benefit once the dust settles down in 6 months, and where valuations are obviously reasonable. So therefore, it's a constant kind of a search for those kind of ideas, and that is what we have to do in a market like this. And also, I mean, in our funds, we are right now sitting on a little bit of cash, so that also helps us wait for if the news flow were to really get worse and if there was to be another round of small correction. I think the corrections would be, not as steep as what we saw last time. But if and when we do get smaller rounds of correction, which I think are part of every market, then we will be using that opportunity to pick some of the names in the sectors which I mentioned, which have become maybe too expensive too soon. And I think that's what we have to do in this market.
Okay, that's fair advice. To one final question, Rahul. When I look at businesses around, and unfortunately not too many of them are listed in the market, but they've been unintended beneficiaries, like the OTT players, for example. They just taken center stage lifetime in everybody's life. Now, we don't have a Zoom, unfortunately, listed in India. If we have a content creator like Balaji listed, that's about it. We don't have too many others done. So within the listed space, are there any unintended beneficiaries of this lockdown and this whole change of nature that we might have post-COVID era, which one should keep in mind?
Well, I think clearly the way we view healthcare as a country and for the government, I think healthcare will get huge focus. I think it was an ignored social sector. So while the government was allocating more and more resources to build roads and ports and airports, I think health will start to take huge priority. And I think healthcare, whether in terms of hospitals or diagnostic labs, and there are a few listed, I think from a 5-year perspective, that sector looks good. The other sector where there is under-penetration is on the life and health insurance. So general insurance, even on the businesses, the general insurance will pick up. So I would say life, general insurance, and the healthcare sector are the sectors which could do really well from a structural point of view over the next 5 years.
Okay. Fair call. Rahul, we'll leave it at that. Thanks much for taking the time out and being with us.
Thank you very much.
Well, before we wrap up, I just want to bring up a set of graphics, a small survey that IIFL did. They did a survey of 100 smokers. It's not a large sample size at all. But their survey, still bringing it up, suggests that their survey of 100 smokers reveals that due to the COVID-19 related lockdown, 58% of the smokers quit smoking, and 73% of those who quit smoking do not plan to restart even after the lockdown lifts. Is that a change in behavior patterns that COVID-19 would cause for good? And will that change industries? Like I said, it's too small a sample size, so we're not drawing inferences out of this. But could some things like these happen? Rahul was pointing towards healthcare. Could healthcare and insurance be an even bigger part of all of our lives, with choice, by the way, over the course of the next few years? And would smoking cease to be as important a part of people's lives, especially for people who can drive the gumption to give it up? And would that alter valuations and earnings for some of the companies in India, companies like ITC? That's a question that I leave you with, viewers, on this leg of Indian Open. Thank you so much for watching today.